Welcome to the deep dive. Today, we're diving into the world of crypto trading. We've got some insights from a seasoned trader,
Right.
someone who claims to have made millions. 6 years they've been at it. That's a lot of market cycles. So we're going to break down their top tips, see what really holds up, give you the information you need, whether you're, I don't know, already trading or just kind of starting to look into it.
Yeah, and it's interesting because the crypto space, it can feel like this whole like exclusive club, right? With its own language, its
So,
own rules. But when you really get down to it, so many of the principles of successful trading, those are universal. So that's what we're going to do today. We're going to cut through all the noise and just focus on those core principles.
okay, so let's unpack this. The first thing our trader wants to tackle is this idea of like these rigid 4-year cycles in crypto tied to Bitcoin halvings. They basically say, forget the hype, it's not that simple.
Right. And it's interesting how they connect this to something that seems totally unrelated. Macroeconomics.
Right.
Global liquidity, things like M2 money supply, central bank actions, the Fed and their balance sheet, like these things influence everything. Crypto is not an exception.
So instead of like marking your calendar for these halving dates, it's more about understanding those bigger economic forces at play.
100%.
Like you wouldn't, I don't know, set sail on a hurricane just because it's a Tuesday.
Exactly. And speaking of navigating choppy waters, our trader's next point is all about trend trading, like the importance of not fighting the current. This is where it gets interesting.
Yeah, because everyone and their dog has heard the phrase, buy the dip.
Right.
But our trader's saying that only works if you're in an uptrend. When the market shifts gears, starts heading downhill, you need a whole new playbook.
Yeah, they actually recommend selling rips or bounces in a downtrend. It's about taking those short-term profits when they're there instead of trying to buy these dips that just keep dipping.
Okay, so instead of trying to time that perfect bottom, which is basically impossible,
Yeah.
you're like riding these smaller waves within the larger downtrend.
Exactly. Yeah. It's recognizing when the momentum shifts, adapting your approach, and then there's chop, right? Those periods where the market's not really doing anything.
Mhm.
Our trader argues this is where a lot of traders, especially newer traders, they lose their confidence.
Because you're constantly second guessing. You're taking these small losses that add up.
Totally.
You're getting chopped up, basically,
Love that analogy.
by the market.
And that's why our trader says it's so important to recognize those sideways periods for what they are, right? It's a time to step back, to analyze, to refine your strategy, not to force trades that just aren't there.
So patience is key, especially when those signals are mixed. Now, switching gears a bit here, our trader also stresses looking at altcoin performance against Bitcoin, not just the US dollar value. Why is that so important?
Because you could see an altcoin going up in dollar value, think you're doing great, but if it's lagging behind Bitcoin, you're actually missing out. It's all relative.
So it's like saying, I'm judging my investment performance based on how much, I don't know, how much cash I have stuffed under my mattress. Like, yeah, I guess I made a little bit of money, but did I beat the simplest benchmark?
That's a great way to put it. And this ties into that whole idea of risk versus reward, right? Bitcoin generally considered like the safer bet, whereas altcoins offer that potential for those outsized gains, but also come with bigger risks.
And you need a way to measure if those risks are actually paying off. Speaking of tools, our trader is a big advocate for TradingView and coin tracking apps, but they're adamant that you don't need to be like a charting wizard to use these things effectively.
100%, yeah. It's easy to get intimidated by those super complex charts, a million indicators. But this trader says even just understanding basic support and resistance levels, that can be so valuable. You're not trying to predict the future, just recognizing those historical price points where an asset has struggled.
So instead of trying to become a, I don't know, technical analysis guru overnight, start with those fundamentals.
Yeah.
Now, what about those coin tracking apps, CoinMarketCap, CoinGecko, those kinds of things? Those seem pretty self-explanatory on the surface.
Yeah.
What are some of the features that maybe people overlook?
Yeah, beyond just checking the price, these apps are great for discovering where to buy some of these altcoins, especially those that aren't listed on those bigger exchanges. They can also help you discover new categories of coins, right? So you're
Yeah.
not just looking at the same top 10 that everyone's talking about.
Makes sense. And that kind of leads into our trader's next point, which is diversifying across multiple exchanges, including decentralized exchanges, or DX as they're called. I've heard mixed things about DXs. What's their take?
They like DXs as a way to get in early on promising projects before they hit those bigger exchanges. But, and this is key, they also acknowledge that there's a higher risk involved.
So higher potential reward, but also a greater chance that something could go wrong.
Yeah, finding that balance between safety and opportunity.
Right.
And speaking of opportunity, our trader really gets into tokenomics here,
Mm.
specifically that difference between circulating supply and total supply.
Okay, and I'm already feeling a little lost, so break it down. Why should we care about these different types of supply?
Because it comes down to price potential. Imagine, right? You have a pizza cut into 10 slices versus the same pizza cut into 100 slices. Same pizza, same amount of pizza, but each slice in that second scenario, it's going to be worth less, right?
Okay, so even if two projects have a similar market cap, meaning like the total value of all their tokens is about the same, the one with the smaller circulating supply, fewer slices available,
Yeah,
could have more room to grow.
precisely, yeah. They use the example of Sui and Aptos. They're both Layer 1 blockchains, very different circulating supplies. Same pizza, different number of slices.
Hmm.
And this is where we get into terms like VC coins, high FDV.
Okay, what does that even mean? Break that down for me.
Okay, so FDV, that means fully diluted valuation, basically the total value of the project if all the tokens were actually available, right?
Right.
Now, VC coins, those are projects that have gotten a lot of funding from these venture capitalists, and those VC investors, they typically get in early, get a big chunk of that token supply.
So even if a project has like a really high FDV on paper, it looks valuable based on the total number of tokens, but the reality is a huge chunk of those tokens, they could be locked up with these VCs who might dump them later on.
Exactly. That's why understanding tokenomics is crucial. It's about looking beyond just like the hype, the marketing, understanding how the project's structured, who holds the tokens, and how that might affect the price down the line.
Sounds like there's a lot more to picking winners than just looking at the price chart. Or, the latest headlines.
Yeah, and speaking of picking winners, our trader then talks about one signal they look for, major exchange listings. Think Binance, Coinbase, Upbit, those big names.
Okay, so it's not just about like accessibility then.
Right.
It's also a signal that a project has gone through some level of vetting.
Yeah, they're not just letting anyone on those platforms.
Right.
And our trader, they're not saying that an exchange listing is some guaranteed path to success,
Right.
but it can be a good starting point to weed out potential scams or just projects that have really shaky fundamentals.
Okay, so kind of like a stamp of approval from the crypto gatekeepers.
Kind of, yeah, but it's just one piece of the puzzle. And, they even mentioned Orion Protocol as an example. They've got listings on some big exchanges, but they've been kind of quiet lately.
Right.
The point is, don't just chase hype. Look for those undervalued projects that maybe people aren't really paying attention to.
So it sounds like we've got our work cut out for us. We need to understand macro trends, analyze tokenomics. We need to look at exchange listings. Anything else?
Well, our trader argues it's not just about finding a good project, it's about finding a good project within a compelling narrative.
Okay, now we're getting into the psychology of the market.
Yeah.
Tell me more.
Think about it like the DeFi summer in 2020, the gaming craze in 2021, or even just this recent surge in all these AI projects. These aren't isolated events. They're driven by these powerful narratives that really shape how people feel about the market, and that creates massive opportunities.
So it's like identifying the next wave before it breaks. But how do you separate, like, the hype from the actual potential?
That's the million-dollar question. And it's something we're going to unpack in the next part of our deep dive. We'll explore how to identify those narratives, why they matter, and, most importantly, how to avoid getting caught up in the hype. And speaking of those narratives, our trader really emphasizes this idea of information advantage. They argue that, like in this fast-paced world of crypto, finding those little nuggets of info, ahead of the curve, that can be huge.
Okay, that's what I'm talking about. Everyone wants that edge.
Yeah.
So where do we find those hidden gems?
Well, they talk about, digging through discords, like really going through project documentation, going deeper than just, the flashy headlines, right? Being proactive, putting in the work.
Don't just read the room, right? Read between the lines.
Exactly. And they actually have a really good example. They made a swing trade on WorldCoin, and their edge, it came from kind of like connecting the dots between the AI hype and upcoming announcement from OpenAI and this planned event for WorldCoin in October.
Hold on. So they were able to piece all that together before the price took off.
Hmm.
That's like next level.
Right. By understanding those underlying factors and how they might influence people's sentiment, they were able to get ahead of that price move. Of course, this takes experience, right? This is not for the faint of heart.
No, definitely not passive investing here.
Yeah.
Sounds like this trader really likes to challenge like the common wisdom. Like this next point, they say that in crypto, often newer projects outperform older ones.
Right.
which isn't that the opposite of what we're told about, traditional investing?
Right, it really flips that script. But their argument is pretty interesting. Think about it. In blockchain, things move so quickly. Newer projects, they have the advantage of learning from those that came before them. They can use the latest technology, and maybe most importantly, they capture that excitement of the market, that newness.
It's like they're building not just on the existing tech, but the existing ideas,
Yeah.
right? Seeing what worked, what didn't, and just iterating from there.
100%. Yeah. They use the example of Ethereum killers, right? Like every cycle you have this new crop of projects saying they're the next Ethereum, but how many actually deliver?
Right. Remember NEO or
Yeah.
Polka? Each had their moment, but ultimately,
Yeah.
Ethereum's still standing, and now we've got like Solana, Avalanche, all these others kind of vying for that top spot.
And that's the point, right? That constant innovation, it tends to favor those newcomers, the ones who can adapt quickly, build a community, tell a story.
So it's not just about the tech. It's about the team, their ability to execute, to market their vision, get people to buy in, literally. Okay, that makes sense. Still feels risky, though. How do you even begin to evaluate a project if you can't rely on, like, traditional financial metrics, right? Earnings reports, cash flow. Like, a lot of these projects are so early stage.
That's the big difference with crypto, right? This trader argues that, at least in the short term, user attention often matters more than those traditional fundamentals.
See, now I'm going to push back on that a little. Because aren't we just talking about hype then? How is that a sustainable way to make investment decisions?
It's not that fundamentals don't matter, it's that in this space, perception becomes reality, at least in those early stages. They give the example of Layer, the tech that's really impressive, but the narrative, it's complicated, not easy to grasp for the average person. And then you have something like Coin. No real utility, but it captured people's imaginations, right?
Yeah.
Reached a multi-billion-dollar market cap.
It's a stark reminder that this is still a market driven by human psychology, with all its quirks,
Right, exactly.
irrationality.
And that's why understanding the psychological factors is so important. Our trader says to evaluate a crypto project, you need to look at two things: a strong narrative and sound tokenomics.
We talked about narratives. Let's double-click on the tokenomics. Why is that so crucial, even if a project has, like, all the hype in the world?
Because tokenomics, in a way, it's like the blueprint, right, for how that project's value might actually play out over time. It tells you how many tokens are out there, how they're distributed, and how that distribution might change.
So it's about understanding, like, potential dilution, right?
Yeah.
The risk that your investments could be worth less if more tokens flood the market, or if those people who got in early, do they have an incentive to, dump their bags and cash out?
Exactly, yeah. It's about sustainability, basically. And speaking of sustainability, let's address I guess, the meme coin in the room, right? As frivolous as they seem, our trader doesn't totally write them off.
Okay, I'll admit, the fact that our, like, seasoned, made millions trader sees value in meme coins, that's kind of surprising. I thought those were just for laughs.
There's definitely an element of that.
Yeah.
But our trader, actually, they make this interesting distinction. They say there are two types of meme coins. The ones that are just, cultural icons, like memes, and those that function more like prediction markets.
Okay, so your Doge coins, your Pepe coins, those would be the cultural icons. They're valuable because enough people find them, I don't know, funny, relatable. They just want to be in on the joke, right?
Right. They tap into this, really primal human thing, our desire to connect, to belong, to be part of something. And then you have meme coins that are tied to specific events. Like, think about the US election coming up. There are already meme coins for different candidates, potential outcomes.
So instead of betting on a horse race, you're betting on a meme race.
In a way, yeah. It's fascinating. It shows how, these communities can pop up and actually trade assets based on their shared beliefs. But it's crucial to remember, right? These things are incredibly speculative. Their value can change dramatically.
It's fun to watch, maybe even play around with, like a tiny amount you're willing to lose, but not exactly.
Right.
The foundation of a solid investment strategy.
Yeah. And speaking of strategy, our trader brings us back down to earth with some practical advice. Protect your gains. They emphasize having an exit strategy before the bull market even peaks.
That's something I struggle with.
Yeah.
It's so easy to get caught up, right? You think the good times will never end.
Right.
But they always do.
They do, and that's why having that plan is so important, because when you're in it, emotions are high. It's tempting to make those rash decisions that you later regret. Our trader talks about setting realistic expectations, avoiding those emotional decisions, and just knowing when to step away from the table.
It's like having an escape plan, right?
Yes,
For a burning building. You don't wait until the fire's at your doorstep to figure out how to get out.
exactly. Exactly. Plan ahead. And remember, sometimes the best trade is the one you don't make. And speaking of protecting what you've earned, another key piece of advice from our trader: stay liquid.
Welcome back to the deep dive. We're wrapping up our crypto trading deep dive with a trader who turned their knowledge into millions. We've gone from, riding those big market trends all the way down to the nitty-gritty of tokenomics.
Yeah, we've really covered a lot of ground.
Now we're at the, I guess, less glamorous but super important part, right?
Mm.
Building that solid portfolio.
Yeah.
So let's talk strategy. Our trader recommends having at least half, like 50% of your portfolio in those big established cryptos. Bitcoin, Ethereum, maybe Solana. They call it a hedge against FOMO, like that fear of missing out,
Right.
which I can see why.
It's like when the market's going crazy, everyone's chasing those, those hot altcoins, having that solid foundation, those crypto, I don't know, like titans. It can really help you stay grounded, prevent some of those impulsive decisions that, let's be honest, can really hurt you in the long run.
Yeah, it's like having that anchor in the storm, right?
Exactly.
No matter how much those altcoins are swinging around, you've got those steady giants in your portfolio providing some balance.
100%. And, it goes back to what we were saying earlier about denominating your portfolio in Bitcoin. That little shift in thinking, it can be so eye-opening. You might think you're killing it because your altcoins are up.
Right.
But are they outperforming Bitcoin? That's the real benchmark.
It's almost like Bitcoin is like the measuring stick for everything else.
It is.
If you're not beating Bitcoin, are you really winning?
That's the question.
Okay, so humbling thought.
Yeah. But it's important, right? Because it helps you make those rational decisions, cut through the noise. And remember, those larger caps, they tend to be less volatile than, your smaller, more speculative altcoins. So that can give you some peace of mind.
It's not just about how much you make. It's about, how much you keep.
Totally.
And having that, I don't know, that mental fortitude to weather those inevitable storms.
Yeah.
And speaking of storms, we can't forget about the dreaded topic of taxes.
Right. Taxes. Right. Not the most fun part of investing, but oh, so important. And, it's easy to get caught up in that bull market hype, treat those crypto profits like, free money.
Right.
But reality has a way of coming back around.
Especially in crypto. Those gains can disappear just as fast as they came if you're not ready come tax time.
100%, yeah. Our trader really emphasizes this. Understanding the tax laws in your jurisdiction, tracking everything meticulously, no guesswork allowed, and, even setting aside funds throughout the year just in case.
Yeah, no more burying our heads in the sand.
Yeah.
Treat this with the same financial responsibility as, any other investment.
Exactly. And remember, tax laws can change. Governments are still trying to figure this whole crypto thing out.
Right.
So stay informed. And it's always a good idea to talk to a tax professional just to make sure you're doing it right.
Couldn't agree more. Well, there you have it, folks. A deep dive into the world of crypto trading, all based on the insights of someone who's actually done it. They've made the millions. They've been through the cycles.
Right. But remember, this is just one perspective, one trader's journey.
Yeah.
It's up to each of us to take this information, do our own research, and, most importantly, don't invest more than you can afford to lose.
That's the golden rule, no matter what you're investing in. And hey, never stop learning. This space moves so fast. So stay curious, stay informed, and who knows, maybe someday you'll be the one sharing your, multi-million-dollar crypto story.
And when you do, we'll be here to break it down.
That's right. Until next time on The Deep Dive, happy trading, everyone.